Welcome back. It's time now to take a look at the top business stories. DFM falls on opening of trading week. Standard Chartered forecasts UAE economy to grow 4% in 2011. And the CEO of Nestlé Worldwide talks about the company's plans for the Middle East. There were mixed results across global markets last Friday. The GCC markets ended lower today, and there were mixed results across the UAE bourses. The DFM fell 1% to close at 1,676 points. MR Properties fell 1.5%. Arab Tech lost 3%. Drake and Skull dropped 3.25%, while Dubai Islamic Bank was down 1%. 85 million shares were traded, valued at 136 million dirhams. In the capital, the ADX gained 0.25% to close at 2,766 points. TACA was up 1.5%. The real estate sector fell today. Aldar Properties was down 3%. Sura Real Estate fell 2.25%. 47 million shares were traded, valued at 96 million dirhams. Now, the UAE is expected to grow at 4% next year. The Standard Chartered Global Focus Report for 2011 forecasts that the country will continue to depend on hydrocarbons, manufacturing, construction and trade. The highlights of the report also include the view that the shift in the balance of economic and financial power from the west to the east looks set to continue.
Although a lack of credit growth is a cause for concern, especially for SMEs, Dubai's debt restructuring agreements have helped the market gain access to international markets. And as the chapter closes to 2010, UAE's economy is looking to gain momentum.
The main outlook on the UAE in 2011 is steady and strong growth. We forecast growth in the UAE to reach 4%. Growth in the UAE will be driven by two main factors: infrastructure spending and project spending out of Abu Dhabi, but also the growth in the non-oil sectors out of Dubai.
Overseas, economists believe that 2011 will see the West continue to struggle with debt, deflation and deleveraging. The euro is a cause for concern too, with fears that it is likely to collapse if the euro area fails to become a political union.
You do see in the West major hurdles still ahead, especially in the US with multi-decade high unemployment, problem in the Eurozone obviously, and at the same time you do see the East and especially Asia, which is basically booming. So what we're seeing basically, or what we're looking at in 2011 is Asia that will lead the growth. By 40% of the growth will be coming from Asia in 2011. And generally speaking, the emerging market world will be responsible for 2/3 of the world GDP growth in 2011.
Standard Chartered's Global Focus 2011 report reiterated the view that the global economy is expected to witness uneven recovery next year. How authorities convert uncertainties into opportunities, only time will tell. City 7 Business Bureau report.
Now, the Middle East is facing a shortage of local manpower in the petrochemical industry. Industry experts gathered at the 5th Gulf Petrochemicals and Chemicals Association Forum in Dubai to discuss how innovation can ensure sustainable growth. And although they believe that raw material, capital and technology is freely available in the region, manpower is vital to building the Middle East's growing chemical industry.
The real issue right now is that it's going to take the next 15 to 20 years to build local talent to lead the Middle East petrochemical industry. That 15 to 20 year gap has to be filled from somewhere else. So finding and attracting the right leaders to lead the industry today, develop the younger people, well-educated teams that are clearly coming through the structures in the Middle East, that's the number one issue. That's the one that I'm particularly addressing.
On the way after the break, we talked to Paul Bolker, the CEO of Nestlé Worldwide, about the company's plans for the Middle East.